So in the previous session, what was happening a lot was that I was playing through the price action just so that people can see how we're applying this live. But what would end up happening is I would go through the data as if we were taking that trade, or I would go through the price action as if we were taking that trade. So we were spending way too much time reviewing information that we're not tracking, essentially. So what I'm going to do today instead is I'm going to play it through to London. And we will always be starting with the 2 a.m. candle. So referring to the data sheet, the 4-hour candles that we are tracking are 2 a.m. to 6, 6 to 10, and 10 to 4. We believe these are the sessions that most people are actually trading. So instead of tracking all the sessions or all the 4-hour candles, we're going to focus on those. And because of that, we will always be referring to the price action that occurred before this. So let me just double check that kill zones and pivots is also on the right time frame. I believe they are. Okay, so 20 starts here, which is 8 o'clock. Okay, all right, so in this case here, we've come up from the PM session low, and we've reached 2.5 standard deviations from the PM session, or 2 to 2.5 standard deviations from the PM session. We have this manipulation currently during Asia, and we have not closed this one yet. We also we have this one as well. My symbol for CSD is just a pound sign. So this would be the CSD that's occurring at the high. We did already reach 2.5 standard deviations from that. And then that was also during Q4. Orders down here. So we've already reached this one out, and we have not failed this one yet. So I would want to see the close here before thinking it's going to continue lower, like if this is the accumulation and distribution, because we haven't violated either side. We either need to violate this one to think that it's going to continue in this direction, or violate this one to think it's going to continue for this deviation. And again, because we are in London, we're referring to the Asia session deviations. Now, the previous day closed bearish with OTE still above us, so I'm inclined to think that we're going to trade higher before we trade lower. There is one more thing I forgot to do really quick. I need to go back here and I need to draw the volume, the fixed range volume profile of the previous day. So this is, he did confirm that we're going to use previous day high and low, even if it was a holiday. Alright, so it looks like most of the volume is up here right now, around 2 to 2.5 deviations, and then 4 to 5 is right in that OTE zone that we want to get into. This would be the next level of most of the volume right here, which is where OTE is. So now let's play forward again. Yeah, the standard deviations are crazy. Even if you observe them in hindsight, it's crazy how accurate they are. And then if you start to learn how to just, because eventually, or essentially what happens is, as you're learning this, the only way to learn it is to just start drawing them everywhere, right? So like, oh, I think this is a manipulation. I think that's a manipulation. And and then you kind of just wait to see how those levels get hit. And then, oh, it's just so ironic, or it's so crazy coincidental that they just happen to turn around at the max extensions. All right, so going into 2 a.m., which is where we were. These dividers here. Oh, I know what's happening. Hold on a second. 1 second. PO3. I have this weekly profiling on, don't I? No, I don't. Trying to figure out why the candle is not showing. The PO3 candle. 4 hours. Candle. Okay. I don't know. No idea. Alright. So these dividers here. Here, here, here. These are all the 4-hour candles. It's showing us all the previous 4-hour candles as well. So we're dividing up without us having to divvy up the candles. It's dividing up the 4-hour candles for us. So we can basically, you can see the higher time frame from the lower time frame, if you understand what I'm saying. You should, all of us, I think, in our level of understanding, if you're not there yet, you want to start working on that. So for example, this 4-hour candle opened up here. This price action up here is essentially the wick, and then this 4-hour candle closed here. So all of this price action down here is a wick as well, and this would be the body of the candle. So this is something that, you know, when you can see the higher time frame from the lower time frame candles, this is something that really adds to your understanding. So likewise, since we opened up here, this portion of price action is developing the wick of the next 4-hour candle, which again, like for example, if I was to pull this deviation here, we're looking to catch this 5-minute deviation or change of state delivery. I retapped it there to catch the 4-hour candle expansion. So going into 2 a.m., had we just held through this entire candle, you would be up, I don't know, 120 points. All right, so again, just from the context of the day, I'd be interested in seeking higher prices before we get the actual before we get the change of state of delivery to go lower. Or we can just seek the opposite end of the daily candle, being that this standard deviation has not failed yet, and we still have a long way to go. All right, so we'll play it through. We're approaching 2 a.m. now. All right, we've wicked the lows. We're in Q2 at the moment, and the last deviation was also during Q2. This is Q3 technically, the Q3 manipulation. Hold on, this guy right here. Sorry, this one actually, which I already have marked out. So I'm looking for that to fail essentially, to prove that we're going higher, and we do have this one here. Currently we're looking for a close above. Perfect. So now I can remove this one, right? We did, before I do that, we did reach, hold on, we did reach 2.5 standard deviations. Okay, so this is technically met, and we've now we're now seeing a full-on reversal from 2.5 standard deviations, and this deviation is still in play because we have not failed it yet, meaning we didn't trade through the bottom or the low. All right, so now we are in Q2 still. Q3 doesn't start until 3. I don't know why it's not showing yet. I guess because we're still in the first candle. Okay, yeah. So now this is a Q3 manipulation because we did close through it at the start of Q3. I'll change this to a change of state delivery. We can now remove this one. And we're not trading this candle, this 10 p.m. to 2 a.m. candle. That's why we didn't take this trade, or we didn't participate in any price action during that candle. This would be the new deviation or new change of state delivery, and it actually is the up close candle in bullish price action. If you hold on, let me just double check that so I can back check myself. I'm going to go to Adrian's mentorship and go to bullish deviations at the top. Sorry, it is the down close candle. I just want to make sure I'm following his definition as closely as possible. So bullish change state deliveries. I'll link that here for you guys to review. All right, so from here we would mark our zone. We already have our deviation, all right? And 2.5 standard deviations is where lunch high would be. It's also in the same area as 4 to 4.5 deviations, as well as 3 to 4 deviations, 3.5 of the PM session deviation that's still holding. So see, they're all kind of explaining the same narrative, that we're going higher, at least into 0.79, which is known as the soup level. So we have our zone here. This would be Q3 London. And currently we have this zone here as well. Let me just mark this out. This is Q3 PM. Okay. Technically, we also still have this one as well. Oops. This happened in Q2. Wait, it starts at 8. We got the close above it, yeah, so this is also Asia Q3. Hopefully all of you guys saw that. The close above this for the change state delivery was on this candle, which is the start of Q3, which is what I was mumbling to myself just now. All right, so now what we're looking for, which we already have, we have displacement out of the zone. So we're essentially looking for SBS to occur now. And we can take trades at 2. So this would be 1, and we don't know where 1 is going to stop. But once it has a pullback, 2, 3, and then 4, 5 ideally. We can take trades at 2 so long as it meets the criteria for an entry. Our criteria for an entry is that it is OTE plus the zone. That's all we're looking for. For the record, Adrian currently trades of just the top of the zone. The reason I have refined that is just to make it more mechanical, so that we're taking the highest probability trade possible. This is different from previous backtests in which we were refining the model to make it more high probability. In this case, Adrian already has the data for us to work from. So we are only trading what is already high probability instead of working it backwards. So we're not refining it. We're just starting with high probability and proving the data behind only that high probability model. So I'm pulling up OTE here. From this range to this range, right? Because we're now in a pullback. So 1 would be this. The soonest that we can take an entry would be EQ 0.618, 0.70, or 0.79. Now this is kind of where I'm stuck on as far as the data sheet goes, because technically, like say for example, the stop loss will always be here. If we take any of these entries, the stop loss will always be here. So in my mind, what I'm thinking is that even if we take the entry from here, here, or here, I would want to track all of those as singular trades to see how far they all make it. Because then we for example could only be tracking 0.5, but it did come all the way down to 0.79. So I'm leaning towards tracking all the reps separately, as long as it taps all of those. And then I do have a category in the sheet as well to track how far each standard deviation went to, as far as each retracement level, how far each retracement level went to each deviation. So where is it actually? Did I delete it? Hold on a second. Uh-oh. That's OTE level. Oh no. Oh, sorry, here it is. These yeah, each retracement level and how far each deviation, or what deviation it went to. Sorry, keep clicking into the wrong screen. So theoretically, we have 4 different trades here, depending on where someone decided to enter, is what I'm saying. So we would have EQ, and the stop loss is always going to be the low, because it's always going to be the bottom of the zone. And then we have 0.618, which is known as the golden pocket. Just pulling the trade to any one of them. And then we also have 0.705, which is ICT's OTE level, the actual OTE level that he got famous for. Stop loss. And then we have 0.79, the soup level, which I think 0.79 is universal because 80 is a institutional level anyway. Good grief, I can't get it. Sorry, OCD. Gotta get it right on, unless on is not an option. Okay, right above then. So I would be tracking all of these data points separately, should all of them tap. So let me just space them out here. All right, next candle. All right, so 0.70 tapped so far. So 0.79, so all of them tapped. So let's see if this gets ran through at this point. But we have 1, 2. Okay, hold on. I need the 3, 4, 5 in order for it to stay on the chart anyway. Okay, sorry, trading view is going a bit slow. All right, so Asia Q3, right, from this manipulation. Again, we're in London, so we're referring to Asia's manipulation. Asia's manipulation midpoint has held so far. So the 50% of the manipulation zone is holding all bodies. So we've wicked through it, but it's holding bodies. So all of these entries so far are holding. Beautiful. So our first target would be 1.5 for all of them. But we can target the next session liquidity that we would be able to target from here is lunch high and then AM session high from previous day. So we're not trailing to BE until 1.5 deviations. Hold on, this brings up a question for me actually. Let me put this in the chat with Adrian really quick. My question here is, because we are referring to, I think it would be the most current one, because we're in London referring to Asia's deviations, do we trail our stops at 1.5 deviations in Asia's deviations, or do we trail to 1.5 deviations of the most current manipulation? Okay, let me drop this chart really quick for Adrian so he can see what I'm talking about. Let me zoom out. Okay. Let me drop this question for Adrian really quick. Okay. This is just trading view is not cooperating with me today. All right, so see, it tapped EQ one more time. So far we have 1, 2, because the expansion doesn't occur out of the zone until here. So we have 1, 2. So if it comes back for a sweep of 2, 2 would be all the way down here, which is obviously really, really close to our stop loss. Taps EQ one more time right there. All right, came all the way back to Asia EQ one more time. We have a new manipulation here. Now this 4-hour candle has now closed. We are looking, or we are hoping that this trade, that if we're taking the trade from here, for example, we are hoping that this trade closes by the next 4-hour candle. However, we don't have a stipulation to close by the 4-hour candle as of yet. That's something else I can discuss with Adrian. It also would be dependent on how long you guys are all willing to hold the trade as an individual trader. Personally, for me, because I'm already in it, I would definitely be holding it personally. All right, there we go. Stopped out. Okay, so we have the sweep of... So we swept all of them, actually. We reached... 2, no, we didn't. We reached 1.5 and 1 deviation. Okay. So we would have trailed here to BE if we're referring to Asia. So I'm gonna track this right now as all losses. But I'm waiting for an answer from Adrian on that to see if we would have trailed according to that or that. And let me just how am I going to do this? I'll do this one here. This trade was tagged in on the same one. Just put it next to it. Oops. Okay. And then 0.75 was tagged in also on the same candle, and 0.79 was on the next candle. Can't really tell the difference, but it's okay. I can bring them in maybe. No, because they all got stopped out here. Never mind, never mind. Hold on, guys. This is gonna be freaking brutal. This is gonna be a pain in the ass, I can tell now. Here. Okay. Let me bring price action forward. Okay. And where is our fixed volume range profile? Okay, so the first screenshot I'm going to take is of this entire thing, because what it is January 1st was a half day. It opened at 1800 but then closed at 12, I believe. Or not. It closed that regular session. Wait a second, what am I talking about? 31st, 1800. Yeah, okay, sorry. Yeah, there we go. It closed at 12 here. So it was... No, that's midnight. Hold on a second. We opened on the 1st at 1800. We closed regular time on the 31st. Open regular on the 1st. Oh, no. Okay. We opened at 1800 on the 1st. So we didn't open... Okay, never mind. We opened on... So we skipped the 1st and opened at 6 p.m. that day. Just wanted to make sure I was getting that right for the fixed volume range profile. Alright, so let me take a screenshot of this as is. Copy the link. And I will be tracking this again as all separate reps. So we're gonna have to go through it too. NQ, this was for January 3rd. This would have been on Friday. This was a long. Let me just take a second to do all of them. Friday, long. Yeah, it's just post-holiday price action. It's not that. So what we're trying to avoid in backtesting is applying discretionary price reading. We're just following a system, right? So we're not like saying, oh yeah, I wouldn't trade this because it's consolidating. We're just following the model for what it is. All right, so the long for 50%. Oh, hold on. Let me drop the chart for all of them. The first chart showing the context. All right. And then the entry for 50% would have been at 325 for that one, for OTE, and for 0.75. And then I'm gonna have to go by 5-minute candles. And then 330 for 0.79. Oops. Wait a second. Why did that happen? 3:25 a.m. Gotta add it. Why is it not saved? Okay. Sorry, this is the only one. This is 3:30. And got stopped out at the same time. They got stopped out at 7:15. Why is it not saving after the first rep? There it is. It's just going slow. 7:15 for all of them. 4:15, 5:15, 6:15. Sorry. 4:25, 5:25, 6:25, and 50 minutes. So 1800, 230 minutes. And 2:35. This would have been during the 2 to 6 a.m. candle for all of them. And the entry in which we got in was all during Q3. Right. Yes. And the PD array, which we didn't mark. The PD array in this case would be this entire OB. We do have an inverse here. Let me just do BPR. And an inverse here. Alright, so the way I'm going to differentiate this is that the 50% level was basically the OB open. The 0.618 was an inverse fair value gap. The 0.75 was not either technically, but it's between them. So I'm going to list both of them as the inverse. Or actually, no, I'll list this one as the OB. And inverse fair value gap. Alright, so this was 0.5, 0.618, 0.705, 0.79. This would all be on SBS2, assuming it would be SBS2. And 5 never swept 4 because it never formed. And did we enter on a macro? So we did not enter on a macro. So that actually was the tell. I need to make an NA. So maybe we make that a requirement. And none of the deviations were met except for, I'm going to check this for now, just in case Adrian comes back and says that we should have trailed for the last one, or for the previous deviation, since we're trading London according to Asia standard deviations. And then that would change whether this becomes a break-even trade or a loss for all of them. So I'm going to zoom in here. What I'm going to do is I'm going to hide these individually for each chart. Each rep, I mean. Hold on. Hide. 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 Okay, so this is the first one. 0.50. EQ. Then the second. .618. Oops. And 0.70. And 0.79. Okay. Now, this was all -1R for now. Oops. Again, until I hear from Adrian about the deviation. I'm pretty confident that we're referring to the deviation from Asia, but just need them to confirm. And then we will put in the deviations that were met. So technically all of them met 1.5. None met 2. So I'm going to put that in again until we get confirmation. So 1.5. Oops, this is the wrong one. Wrong rep. We did 1.5. Just did 1.5. And there we go. Don't really have any notes here. There was displacement out. We reached, okay, that's my note. We reached 1.5 SD of Asia. And 1 SD of London. So the reason this is significant as a note is because when you're trading counter trend for that time being or that time frame, 1 to 1.5 is going to be the max extension before a manipulation occurs or Judas occurs. All right, so now that we have all of this out the way, I think I have all the charts that I need. So now moving on to the next 4-hour candle, which has already printed or is already started. We now have this candle here. So 6 a.m. has opened up. We've traded both lower then higher. We're basically consolidating on the opening price so far. We've come out and taken out the London manipulation only. We haven't taken out Asia. Still consolidating. So we come back to midnight and consolidate here. We've only taken out London low so far. Asia, I think I remember this day. Asia low holding still. All right, and now again we have a new CSD confirmed, so we trade above here. So Asia deviation again still holding. Hold on guys, I have to pause here really quick. 1 second. Here we go. So now we are approaching pre-market. We're not technically we're not technically in New York yet, so we're not referring to London yet, but this would be the next change day delivery that occurred, or that sent price back to take out London low. And we came, so 1.5. Let me just pull up the entire thing here. We came exactly to 2. Hold on. Sorry. I'm choking on cashews. Maybe that was a bad choice of snack here. Alright, so we had this deviation also occur during Q3, or no, technically during during Q4 here, because we didn't displace below it until then. So Q4, and it did deliver all the way to two standard deviations. All right, so now we have this happening during Q1. Again, Q3 from Asia still delivering. Okay, we did close below EQ now, but it's still delivering. And we now have flipped Q3 of London once more. So we went to go sweep it, and we've now traded above it. So this is good to keep on your chart just to see that kind of like support and resistance, right? We did sweep it. We were unable to stay below it after closing below it. So we just, traded right back up. Oh, thanks, Deuce. Yeah, I love cashews. It's actually a mix, side note, it's a mix of pumpkin seeds, cashews, and almonds. But I just happened to be dying as soon as I got back on the mic. But yeah, okay, so anyway, we're still delivering from here. From this 4-hour candle, this would be the closest manipulation. Unfortunately, it is happening during Q1. I mean, well, we can still take this trade happening during Q1, but... And now we are currently within the 810 or 750 to 810 macro. So let's just see if a 1-2 forms. Or we actually already have a 1-2 technically. We have 1 here. We broke structure there. No, we didn't get the close until here. Well, no, sorry. Yeah, we closed here. So we got a 1 here, 2, 3. Oh, let me just double check. I think I'm getting mixed up. For the Adrian's bullish change state delivery. Pretty sure it's the down close candle. 5-minute high that made the low. The high that made the low. This one. So it's that high that made the low. Let me confirm. That also happens to be a swing high. That's an up close candle. Alright, so he's focusing on the swing points. He's not necessarily focusing on the candle close. The algorithm won't forget PD arrays, so why should I? Okay. Alright, so I think as far as SBS goes, this counts. I'm sure Adrian will come correct me if I'm wrong about this. But we have 1 breaking structure, 2, 4 would be down here, 3 is up here. Obviously, of course, it hasn't pulled. The pullback may not necessarily be done. But 4 can come all the way back down here if this is actually 2. Now, if this is 2, like if this entire thing is 1, then 2 has yet to form. Now, what I'm saying here is that we're tapping the London manipulation zone. So let's see if that holds or if it continues, and of course it's continuing. Alright, so yeah, now this would be, to me, 1, 2, 3, because there's no question that this is breaking structure. This is a little iffy, but 1, 2, 3. 2 we can't get a trade from because it doesn't meet OTE if you can't see that with the naked eye. Right above EQ there. EQ just happens to match up with the change of state delivery. There we go. Alright, so now this is clear. 1, 2, 3, and this would be entry upon 4. Alright, so we're going to place our longs here as if we are taking the trade. Again, the stop loss would be at the low of the manipulation. We can enter at any quarter as long as we are working from a Q3 manipulation, which we are still working from the Asian Q3 manipulation. And this here, This is the new manipulation, or the most recent manipulation out of that zone. So from this low here, I have OTE on the wrong leg. Okay, so let me pull back this guy so there's no confusion. OTE, or golden pocket, OTE 0.79. And 1, 2, I'll just put this on the chart. So 4, 5. I don't know where 5 is gonna land, of course. And then now we will at least target at least London high. The R is there. It's over 1.5 of the most recent, but 1.5 of London isn't being achieved here. So I think it could even be safe to reach higher. But London session high is also just a really good target because of session liquidity. As far as deviations go, or as far as targeting goes, right now we have it structured that we are targeting deviations as our close, right? Because this is how we're tracking it. And the half deviations are where the sorry, I messed something up here, are where the accumulation and distribution ranges will occur. So we shall see what plays out here, but this would be the stop. Oh, sorry, I didn't even have this pulled out all the way. So hold on. London would be 1.79 R. I think Adrian confirmed that he's just looking for at least 1 R for these entries. So as long as we're over 1, it's good to go. Excuse me. Low is 208.50, low 208.50. Okay, so they're exact equal lows here. Fantastic. Yeah. I mean, you know, arguably, not even arguably, no brainer that the lower the R, the higher the win rate, right? So positive expectancy all the way. I think the only thing that differs with most people is, can they take multiple 1R trades without going on tilt, right? Because I think that's usually the issue with most people is, okay, here we hit 0.75. We're going to add another one on. Or, you know, can they stop trading 1R trades after X amount of winners without getting greedy, right? Because again, like, generally speaking, the idea is that, or for me at least, my trading plan says that I can keep trading as long as I'm green, and I can keep trading until I'm BE. But the moment I go red after being huge up green, then I've now turned winning trades into losing trades, right? Or I've now turned a winning day into a losing day. So we should all, in my opinion, following LMT's risk management and trade management, is that we should be maximizing our profitable trades by even using the new drawdown that we've developed that day, right? And we should be leveraging that equity to make even more money. But we should keep losers small. So if we are just throwing away all this profit, then we're now doing it wrong. So there's a balance between, like, okay, I can take a ton of 1R trades as long as I'm green, it's all good. But if you take in 5 green trades and now you're approaching 3 red trades, that would probably be a good place to stop. I think in general, the new kind of consensus, or for me at least, I don't want to trade until I'm red or break even. I'm actually now trading my green equity until I have the minimum for a trading day to count. So if I'm trading Top Step and I've made $2,000 that day, I'll continue trading until I have $200 equity left. when I have $200 equity left, then no, I'm done, because this can still count as a trading day. This is still technically break even to me because I've lost all the equity that I've built up that day. Okay. Next candle. So we're in these three trades. 4 has indeed printed the way we thought it would. Let's see where 5. Okay, profit. Let's see how far it goes. So London session high. Yeah, this is great. 2 standard deviations met. 1.5 standard deviations met. 2 deviations met from Asia. I'm just gonna start drawing all this out. 2, 1.5, 2. So we're gonna woo. We're gonna see how far these trades go, obviously. Until I think the max would be 5, or until previous day high is really the ultimate target. I think previous day high should always be the terminus. Oh, we're still playing out this one actually. Okay, no, we can keep holding. Ooh, beautiful trade. You know, if this was real life. All right, there we go. So now we have a pullback. We did reach 4.5 deviations. Oh wait, this here, this level, I think is like, this is from the this line here is from the fixed range volume profile. So I think it's either like VAH or TPOC. I don't actually know the difference between them. I don't even know what they stand for, to be honest with you. But we did reach 4.5 standard deviations of this original deviation that we're still working from. And this would indefinitely be terminus because of 4.5 on this scale. Like, that is 100% where we're ending the trade. But now, what... Or I guess this one would be, because we're working off Asia's scale. Because this is the Q3 that we're referring to still. The Q3 that's still currently holding. Alright, we're going to play it out to see what happens either way. How far it goes. I don't even know where. Let me turn the prices on. $64.25, so they're all at $64.50. $64.25. $64.25. Jesus, this is tough. Do I have 2 there? Hold on. Do I have 2 or not? What is this one here in the middle? Or is there one in the middle? Am I hallucinating? No, I'm not hallucinating. Oh no, that's the price action being tagged. Tough. Hold on, hold on. Okay, yeah. Let me go back. Add this. There we go. So this is in the right place, right? Yes. That is the last one. This is gonna be so hard because I'm never gonna let this go. I'm always gonna have to fix these before I can track the data. 6425, this is just gonna be a nuisance. Alright, there we go. All three in the right place. Bring them all to here. Again, we'll still play this out to see how far it goes. I don't think we want to get any greedier than that. Again, I'll talk to Adrian about this. This is another instance in which we'll figure out if there's another trailing method that we can use. Okay, right back up. And it takes out the high and comes back lower. So this could be a new SBS forming. Did we close above highs here? We did indeed. So 1, 2, 3. This could be 4. And we are approaching a new 10 a.m. candle as well. Okay, hold on. I'm gonna cut this here. Again, I'm just playing this out to see where it goes. Yeah, it looks like a new SBS to me. Okay, and then previous day high. Just like we wanted. Okay. Well, that gives us the answer for the next value area high. Thank you. Continuation purge. We'll be looking for market making model we're in. Yeah. Okay. Jess, do you ever mix the captain model logic with this more immediately using the 6 a.m. 4-hour candle as a range to measure the breakout reversal? Yeah. If you think there's going to be a trend day, that's really when you want to use the captain backtest model. Because, like, you know, we can see here from 6 to 10, we are closing up here from an open all the way down here. So we can see on the 4-hour chart, this is a huge bullish candle closing above all of these previous 4-hour candle highs and essentially breaking structure here, assuming this is like a reversal candle, right? So this is previous days 10 a.m. we opened up here. So no, this is technically a bearish candle, and then we're trading inside up until this point and up until we close above it here, right? So whenever you see, let me just go to a 4-hour candle. So this is irrelevant to the model, guys. I just want to explain this really quick. So whenever you see a candle like this, ideally this is an up close candle, right? But you swept the previous 4-hour low. Oh, this is perfect. So we've swept the previous 4-hour low. Like, let's say this is 2 a.m. This is actually 2 p.m. Let's say this is 2 a.m. Then 6 a.m. closes higher. Then captain backtest, you 100% can assume that this is going to happen. So that was a bit of information that we didn't release with the model when we revealed it to the public, probably over a year ago now. But captain backtest is made for trend days. So the whole point of the model was to capture trends. So this is best when when you think it's high probability that the low or high of the week is in, or low or high of the day is in, really. And as long as you're confident that that lower or high of day is in, or for the day or for the week, that is the best time. You obviously, if you combine both, but that is the best time to trade that model. Oops, no, don't do that. All right, so I'm on the fence of how to track this here. So this is holding, this is holding. We're in pre-market. London Q3. I think I'm going to go with this one. Because this is a Q2 manipulation. So we're not necessarily aiming for that. This Q3 manipulation is what we're playing off of. So I'm going to track it according to this 4.5 here. We never had a 5 form. And this would be the new SBS here. I'm going to bring it back to 10. No, it didn't sweep Asia. This is Asia right here. This blue line, that's the color that I have for Asia. London's red and New York is green. Yeah, really, really, really close. And it's almost beautiful because it swept London perfectly and then went right back up. Even this pre-market low between Asia and London, right at midnight, it didn't even sweep that. What model did you say to use if it's trending, Jess? Captain Backtest. It's a model that Captain Mickey and I came up with. If you guys follow him on Twitter, Captain Mickey, myself, Backtest Jess, we combined our names. It's called Captain Backtest. This model right here. It's really just a breakout model. The foundation of it is kind of similar to School Run model by Tom Hugard. So you get a close above, you get a 5-minute close above the previous 4-hour candle. You wait for the pullback to happen, which would be the manipulation. Once you have a pullback occur and you get the bullish close again, then you can enter that trade and take it until, you know, whatever. I think it's like, I don't even remember, to be honest. I think it's I think you're holding it as long as possible because, again, it was to capture the trend days. Yeah, 100%. There is probably SMT there. Alright, so I'm gonna track this now. So there are 3 trades here. Can't really capture it without this guy, which is going to be a pain. So next 3 reps. Six, 7, 8, all in Q, all January 3rd. All Friday, all long, and the entries what is this line here? Maybe like that. The entries. This entry occurred at 8:50. Oh, great. We're in the macro. 8:50, 8:55 for 0.705. See, now I have 2 825s. That's so annoying. Hold on a second, guys. I have to fix this while I'm looking at it. This one here. If I delete this, which one is missing? 325. There we go. 850. And then this last one is the only one that occurred at 855. What is that indicator down there? Which down there? I'm assuming you mean this guy. This guy is called ICT Times by Josh Yu. All right. We all hit. Oh wow, we hit TP right at the open. 9:35. I don't know that any of us would have closed that. Realistically, I don't even know if I would have closed that. If it was zooming up like that right at the open, I would have kept it. Oh, come on, Notion. I need you to keep up. All right, so 8:50 to 9:35, 45 minutes. Same thing, 45 minutes. This one would have been 50. There we go. 9:35 is now in. This would be during the 6 to 10 a.m. candle. And the quarter of entry was during Q2. Which makes sense because of the data. This was all in an OB, a singular OB, super clean, because this is just one big down closed body. Oops, OB. All right, and then we have 0.5, 0.618, 0.705, and this was all SBS 4, right? Yes, all SBS 4. And 5 never showed up. Well, 5 technically I guess would be this guy here. That was the only pullback. There's probably a 5 on the 1 minute basis as well. Yeah, so 4, 5, like in this range. It technically kind of did both, because the first 4 would be here. This could be 5. If we considered this 4 at this point, then this would be 5. So this would be for these two, for 618 and 70. No, just for 618. 5 would sweep 4. And then, oh, wait a second. It's only 2 reps. What am I doing? Hold on. Why do I have 3? That's why I kept getting confused. It's only 2 reps. Yo, you guys are not paying attention. Hold on a second. Okay, here we go. So 0.618 was the first one. Good grief. You guys are just letting me do anything. 6.8. What am I doing? 7.5. There we go. Ooh, beautiful entry. Okay. 6.18, 0.618. And they both went to 935. And what is this line here? That's the TPOC. Okay. Now I have to retake the screenshot. So this one is not a rep. Oh, I never even pasted the chart. Oops. All right, so this one, it swept. This one was a failure. This was during the 8:50 to 9:10 macro. And we reached all of them, I think. Again, assuming that we're referring to the Asia deviation still, because the London deviation was swept. We reached all of them. So right here, when we hit 1.5 deviations of Asia, we could have trailed to break even, but we reached all. So I can just do this for all of them? Or would it be the deviation of this swing here? Let me turn this on to 5 SD. So 1.5. It would probably, I don't know, I have to talk to Adrian about this. I really have to get his answer on this. Whether it's kind of, they're all very, this is very similar, right? Because it came all the way back down. But here, like, I'm assuming we're referring to the most recent swing for trailing the stops. I have to really talk to him about this. This is a really good example. Let me drop another chart for him in our chat. I'll drop it like this. Okay. We have to make that mechanical because there's going to be too much confusion about that. So what I'm thinking is target original deviations, but break even according to the most recent deviations is what I'm thinking so far. I'm gonna talk that out with him and we'll figure that out. All right, so now here for this, on the very first trade at 0.618, let me hide the long positions. Okay, 0.618, this was a 5.29R trade. And in this instance, we went to all of them. So 0.618 to 1.5. This is going to be a pain. 2.5, 3.5, and 4.5. And here on the second trade, did I track that chart? I sure did. Long position. That's, yeah, okay, 0.75. I mean, technically we did meet all of them for all of them. I don't know. Oh, sorry, the R. This was a 6.91 R trade. And this hit all of them as well. 2, 3, 4.5. I'll drop the link. Now this would differ. These OTE to deviation ranges would differ in which, like, if we had something like this, just so you guys know, this is not going to be like, this is useless. Like if we got this entry, which this is a sick entry, but if we got this entry, then it went to 1.5 and then it came back to, I don't know, another retracement level, and it kept doing something like this. This is where we would start to use the different retracement levels to different deviations within the same category, right? So from these specific levels here, we kept going lower, and we went back up. So we didn't go back and forth, if that makes sense to you guys. All right, any notes on this? Not really. Current or most recent? So they're pretty much exactly the same. All right, this is a lot. This is actually more taxing than I thought it would be. Okay, so now we're going into the 10 a.m. candle. We've pretty much maxed out all of these deviations at this point. We have already played out this SBS as well. So 5 ended up being that candle. I'm going to keep this all on the chart because it's playing towards our narrative. Now, we did close above this swing high here. And we already saw it play out for the most part, but this would be the new 1 to me, 2, 3, and 4, 5 if we're going to continue into previous day high, which again we already saw that that's what's going to happen anyway. But from here, new 10 a.m. candle is occurring right there. So from here, because we already have a 1, 2, as long as we get a sweep here, then we can continue to enter. Now, because we've already maxed this out, I know from just from Adrian that once we're trading into these levels here, you really don't want to start to take a trade, right? Likewise, because we're still referring to this deviation here, this is the overall big guy that we're all trading within. Notice what's happening here. When we hit 1.5, we accumulate, we distribute. We hit 2.5, long, huge, gigantic accumulation, manipulate, distribute. We're now at 4.5. So in the 2.5 to 4.5 ranges, it's really, really hard to take a trade in this area. But of course, if a new manipulation occurs, then that changes it up a little bit, which again we already know that that's what happens here. So 3 gets taken out, or 1 gets taken out. So again, 1, 2, 3, and then we're looking for a 4, 5 of some sort to occur. And we do want a Q3 manipulation, which would be this one here. Actually, we do have a new manipulation occurring here. This would now be yeah, because because 2 to 2.5 is where a deep retracement or a reversal can occur, and then 4.5 you have a high probability reversal occurring in that area. So I'm just going to pull them forward just so we can see all what's happening. But this is now the AM session Q3. I don't know why I always do it backwards. Q3 AM session. So the reason I'm calling it Q3 is because although this started in Q2, we didn't close above it until Q3. So yeah, pretty much. And oh my gosh, what am I gonna do? Am I gonna do am I gonna OTE this entire range? I guess so. So 0.79 is the only entry we can take in this. We're not gonna take this, and these are the rules that I've developed, or I've created for this specifically. Adrian again is only requiring a tap of the zone. For me, I'm requiring both OTE and the zone. Again, just to make it more... Oh, it does hit... Oh, shoot. Hold on. We have a trade. It does hit it. I didn't recall that it did that. 0.79. So this is the entry that Adrian and I, again with Frieden is noticing the same thing. This is the entry that we're all kind of hoping for, to prove that this is in fact the best entry to take. So previous day high is right around 4.5. I'll leave it at 4.5. Although, you know, we already know previous day high is going to be hit. But, and we're also hitting, we've already reached this too. But we're also hitting, we're also maxing out this original deviation that's still playing out. So we're in this trade now. OT again is pulled for this entire range. I'm going to use this highlighter here because it's starting to get a little messy. I think I'm going to go ahead and delete this as well. Oops. We don't need this context anymore. So OTE is from this low to that high. I'll leave the previous deviations on, although I find that to be very messy as well. And we're focusing on this deviation here. The reason this deviation is of importance to us is because this is the previous 4-hour candle, right? Both of these deviations are the previous 4-hour candle, but this is essentially a new manipulation happening in Q3, predicting the next 4-hour candle expansion. Ideally, is I think what we're trying to drive home. All right, so there's 5. Boom. Hold on. There's 4. There's 5. Can't take an entry from any of those, so it'll just be this guy here. And we're looking to hopefully close this trade by 2. Which, again, we already know that that happens. Beautiful. Okay. Now let's go ahead and track all of this. Any questions so far? Any complaints, concerns? Anything? Again, I have to grab this entire picture because we're still working off of this fixed range volume profile. So this is a good example of where it's just the one level. NQ. This is still January 3rd somehow. Could have made a lot of money this day. Friday. Long. Did the long occur during a macro? 1020, not quite. Not quite. Sorry, hold on. The entry. Let me bring this in. The entry was at 1020 to 1150. Oh, that's interesting. $10:20 a.m. to 1150. So that is 90 minutes. 10 a.m. to 2 o'clock. The quarter in which we entered was Q3 as well. Wait, what's happening here? What is the sort on? Oh, the sort is on the Q3 entry. That's not right. We need to sort this according to dates. PDA in this case was also the OB. The inverse or BPR is down here. Could be a breaker as well. Not quite. I'll go with OB. 0.79 level. SBS 4. Alright, so 4 is proving to be a good entry. So this was a failure. There was no macro here. We didn't enter on the macro here. Yeah, no, technically it didn't. So now 1.5. Again, assuming that we're targeting. Okay, yeah, this is another. I really need to speak with Adrian about this. We're gonna have to figure this out. I'm gonna click all of them because we've maxed this one out, so now we're referring to this one. Maybe there's gonna be a hierarchy of how we refer to deviations, not sure. I'm gonna click all of them. This R for this trade was 4.69. And from here, okay, so from 0.79, we reached all the way up to 1.5. And then we had the pullback to 0.618. Let's see how this looks like on a 1 minute just to confirm how it traveled. So 0.79, 0.70, all both reached up to 1.5. Yes. We reached, or hold on, not quite. Maybe not quite. Oh yeah, not quite. Okay, so all of them actually. All three deviations met 1.5 first. Here. And then 0.5 to 2.5. Is everyone following what I just did there? 0.618, 0.70, 0.79, and then 0.50 was the only one. Okay. And again, I need to grab the entire context. I thought I already did. This is probably not always going to be like this. This is probably just because of the holiday that we have to get this much information in one chart. Let's go to 1 hour. No, I feel like that's not enough data. Okay, this isn't bad. This isn't bad. We'll go with this. Yeah, Q3 is always 9 to 10:30 for the New York session. I mean, all the Q3s are always the same times that they always are. Q3 during London is 3 to 4:30. Q3 during New York is 9 to 10:30. And those always happen to be the best times to trade. And then Q3 during Asia is 9 to 10:30 as well. Right, yeah, 9 to 10:30. Okay, and I'll grab it from Asia. Again, since that's the one that's holding. Let me make sure okay, yeah, I didn't save it yet. Didn't save it yet. Grab this one here. All right, and okay. Notes on this one. I'm just gonna put that we were referring to most recent 4-hour candle deviation. All right, so let's see if we get anything else for PM session. So generally speaking, this may not necessarily be the case. I think because we're always taking it piece by piece with this model, like we're always seeking out the next 5-minute deviation. Excuse me. We can continue to trade past previous day high. Generally speaking, for me, if previous day high is achieved before I take a trade, previous day high or previous day low is achieved at any point, I'm done trading for the day. That to me is always the daily draw. Previous day high or previous day low. Obviously it can go well beyond that. I'm just not interested in that because I view previous day high and previous day low as low hanging fruit. All right, so now let's delete all of this from our charts. And we will now play it into 2 p.m. Okay, here's 2 p.m. here. And we're still working on this one here. We do have this deviation or this new manipulation down here, which did occur during Q3. Oh wait, no, it didn't get confirmed until Q4. We'll go with 5 deviations. We have Q4 AM session. Alright, so the only reason I'm referring to this one is because we've already maxed this one out. 5. This could be the most recent manipulation that I could be working off of now. So this would be the breakout 1, 2, 3 whenever it stops, and then 4, 5 returning into the zone somehow. So 2 has only opened and gone straight up. If we get a 5 in the CSD here lower, that could play out. And then of course, as I say that, it happens. So it could be this guy here. Why? Because now that we've expanded so much, we could return to OTE of the entire range. So we've now invalidated this OTE. I'll hide that, right? Because we've already traded above previous day high. And exactly, we can run this low, go into this unmitigated OB. This OB is also unmitigated. This here is one of the signatures that I look for when, like, right here, right, when we trade down and we're expecting to go higher, we know that when we close above these down close candles, that this is going to become a OB once we close above it. So because of that, I like to, which we've done here with this range, I like to grab 50% of it, which is mean threshold. I go by the bodies personally, but here we've grabbed 50%. Know this 50% is holding. So mean threshold after we close above it is holding, price up. And then here we have a an OB print inside of it. So inside of this consolidation, pulling mean threshold of this body, they're around the same level, right? So when this prints here, like when we have this OB inside of an OB, this is the area that we're looking to return to. In current price action, Adrian and I called this weeks ago. I think it's a 3 months actually. Let's see if we can get it. This OB here is the price action that I was calling, or where I was looking for this OB inside of this bigger OB is where I was calling for price to return to, which it did. It's a little bit different on the there we go, via Jess. So it came right to the body. But that, and again, how I get that is by pulling this mean threshold, right? So any order flow that's on this mean threshold, I'm looking to return to that. Yeah, because you're actually supposed to refer to OBs when price are consolidating. So in consolidation, the price action that you're referring to is the OB at equilibrium of that consolidation, which is taught in core content. So that's how I interpret that. Okay, so here we have this is bring 4 deviations, is bringing us right to body mean threshold, as well as mean threshold of, or yeah, midpoint of the entire zone. So let's see what happens here. So far we have an open high for the 2 p.m. candle. So we're looking for a 1. Now, if this is a higher time frame SBS, or like a longer SBS playing out, then we're looking at 1, 2, 3, 4, 5. So it's at least coming into the zone, at least reaching 2.5. Now let's see if an SBS plays out bearishly, revealing the same logic. Oh, I forgot to draw my zone. Alright, so we do have displacement out of the zone. Let's just draw OTE here just in case it plays out, which it looks like it is going to play out. Alright, so as soon as we can take a trade is right here. I'll go ahead and place a short in case it happens. Stop loss will always be at that high. So then in this case, of course, this is we've seen 2 fails a lot, or 2 has failed a lot already in our backtest, just from like the first 4 reps that were all the same entry. So this is 1, 2 potentially around here, 3 breaking the low, testing previous day high, probably trading back up, 4, 5. I'm assuming it's going to be like that, and then 6 down into the 4 and 5 area of this bullish SBS. So this would at least be targeting 1.5. Oh, it doesn't come up. Okay, so we already have now 3. So 2 ends up being, let me see, high 528. So the highs are the exact same. We missed this. Excuse me. 3 already sweeps 1. It can go lower, so it's not automatically set yet. Yep, so 3 ends up being previous day high. We have no entry for this trade yet. So again, the 0.5 level is as soon as we can get in. Oh, we're approaching end of day actually. Okay, this is it. So we can't take a trade here, unfortunately. We're now at the end of day. So just no entry occurred there for us. All right, we're now 2 hours deep. Not many people stuck around. It is kind of hard to follow. There's a lot to track. I'm going to take a quick break here to eat. We'll be back in 10 minutes. I'm going to leave my screen up. So we will call it 2:10. BRB at 2:10 p.m. Deuce, I'm surprised you're still on. So if you're not here when I get back, completely understand. Thank you so much for sticking around. So I'll just leave this. Hopefully everyone can see that. Yeah, my pleasure. Have a good night. Alright, so we'll delete all of this now. We can still keep this idea on technically, or I'll extend OTE now to 3, since 3 did play out, as we go into the next day Asia session. So this would now be PM Q2. Q2 PM. So we're just gonna play through Asia, see what happens. Now, before we do this, actually, we do have a new previous day high and previous day low now. And this is Monday after this Friday at this point. So this would be referring to Friday's price action. Yep. And our new fixed range volume profile would be from previous day low to previous day high, bullish. And OTE is now down here, with most of the volume being around EQ actually. Yeah. So most of the volume being around EQ, aside from this area here, which I assume is in the top 25, yeah, in the top 25% of previous day. Let me see if I can change the offset of this. Should be able to. Generally have, nope, I don't. Worse. Session, extend to live price. Extend to candle close. No, that's too far out. So there's no padding on that. Let me see if there's padding on previous day high, previous day close. That's SMT. Of course not. All right. All right. So I think since we've ran out all of them, I'm going to just keep on the PM session one now. We can remove stop loss. AM, PM, sorry. PM, AM, London. I'll keep on the last three. We can delete Asia. I'll delete all the deviations though, because I do believe we've met all of them, with the exception of this one here. So this is our framework. Previous day high, previous day low. Previous day high, previous day low. We have all of the most recent sessions, so the past 4 sessions. 3 sessions, but there's 2 manipulations occurring here. And then we have our fixed range volume profile. So the most recent deviation that we're working off of is the PM session deviation here that happened in Q2. Now we are not looking to take a trade within this unless we get a new Q3 manipulation in Asia, because we're only testing data for Q3 manipulations. All right, so we're still inside of PM session high and low, this being the low, this line here. PM session high would obviously be, we can delete this probably. Yeah, we're not going to take a trade from that. It opened up from that. And this also still has not played out. So 4, 5. EQ's down here with the range, with the volume being down here as well. So I would assume 4 and 5 is going to look something like this if it's going to continue bullish. When you say manipulations, is the requirement that it sweeps some session liquidity? The manipulation, yes, it has to, well, the A+ setups will happen when it also sweeps session liquidity. Like this, for example, was the A+ manipulation here. However, we're just looking for either a sweep of TMSO, which is the base requirement for a manipulation, is that it sweeps the open of Q2. But we are actually just looking for it to take out some sort of liquidity, ideally the liquidity of all previous quarters. But session liquidity is the foundation of how both Adrian and I both trade. So yeah, this here, the session liquidity, this was the A+ deviation here. From there we traded up. We had the CISD that was confirmed here, and then in the AM session we came down and we made a new manipulation leg in Q3, and all that happened here, let's see, the open was there, it swept the open of Q2, which is TMSO. Alright, so we're now at midnight. The leg I would actually use in Asia is this one here. So assuming higher, it'd be that one. We hadn't closed lower for a bearish displacement. Notice this would be the bearish change of state delivery here. In Asia, or technically Asia doesn't start till here, but this would be the closest one. I guess we can use this one as well, but it didn't deliver into PM session low, so that to me is insignificant. We hit 2 right before PM session low. We never like officially broke structure because this is all still a retracement from this bullish leg here. So we didn't like make any new structure in my opinion. So we hit 2, we now are displacing up, we have a change of state of delivery bullish, high 508, 508, so it's the same exact high. This is the CSD occurring here. Q3. Okay, no new manipulation. We have this one happening here, this sweep here, but that's all still within Q2. I'm gonna draw this out as the zone for now. This is technically happening pre-market. Asia range to me happens at 8. I think someone, both Adrian and Cozy are in agreement that volatility in Asia starts at 7:30. Maybe that's something new that ICT has said. I have not consumed any ICT since early 2023, so I'm assuming it's newer content. Oh wait, we didn't confirm the CSD until Q3. Okay, so Q3 Asia. This is our standard deviation. We did also retrace to... No, we didn't. I lied. Top 25% of previous day. So overall, I think this plan still of 1, 2, 3 breaking previous day high, 4, 5 returning into EQ of previous day, which is right here. I think this is still a solid plan until proven otherwise. So what would prove this otherwise is if we break through 3 and create a 6, although it wouldn't be SBS because we didn't sweep 2 unless I have SBS incorrect and it's actually 1, 2, 3, 4, 5 and then higher, which is possible. This could just be like a new SBS, for example. This is more than likely higher time frame, this bigger one. Alright, so we're already into 1.5 without the return. Let's see, we had this displacement up. Let me see if I missed this. So we had this displacement up. This would be OTE. It returns to 50% beautifully. Also in the zone. So this would be 1, 2. 3 is all the way up here. We haven't had a 4 and 5. So this could be the delivery that I may be missed. Or 2. into 1.5. Oh, it didn't deliver. So hold on, let me see. We did have displacement out of the zone. It did return. Okay, yeah, I think that's a missed entry. These there. Stop loss here. I need to delete this. Also going to delete that. Alright, so assuming we're aiming for 1.5. Ooh. Oh no. Let's see if it actually hits the target or not. So we wouldn't be break even until 1.5 anyway. The furthest this could go that we can aim for without closing, let's say, is 4.5. And we're BE as of 1.5. Again, I think previous day high is a solid target overall. I don't think we should be aiming any further than previous day high personally, but there's 1.5 being tagged there. And so now we're BE at this point. To this candle. There we go. So this is our trailing stop. That's all I'm showing there. This would be a 2 entry. Unless I'm wrong about SBS. It could be that this is 1, 2, 3. Because this would be the new breaker structure here. So it could be 1, 2, 3, 4. Sweep of 2 here. 4, 5. And this is just a new manipulation. And then again, this would be the new 1 breaking structure. Could be completely wrong, I don't know. I think there's a lot happening here. What I would think here, because this is the new zone, is this is 1, 2, 3, and that we're gonna come back and sweep 2 to dig deeper into this. Oh shit, I forget I can't add it until it's all there. So 1.5 at this point, hold on, is 2.69 R. Come on, Poppy, there we go. And it just keeps going. We are now in Q3 and we're in London. We've broken, we're above previous day high now. Wow. I'm not gonna lie, I would have not thought that this would have gone to target in London. Okay, so there's target. Yeah, so this is it. So yeah, the only thing here, like referring to previous day's price action, right, is I could be wrong because, especially because we've started a new day here, right? So this could be the SBS that I'm thinking is actually playing out. Yeah, no, well, technically, though, let me see, this trade. Oh, yeah, technically, we wouldn't have taken this trade. Um, yeah, ooh, tough. This is a missed entry for us on the data sheet. But yeah, that is bananas. I don't even remember this happening Monday, January 6th. I don't think I traded that day, maybe. So this would be 1, 2, 3, 4, 5 is what I'm assuming is the SPS that played out. And then from here, this would be 1, 2, and 3, I guess, is here. But we never come back to sweep 2. So 2 here is the delivery. And I wouldn't be surprised if there's SMT like with these lows here. Like dipping lower than 2 in this instance. But yeah, this is a fire trade. Now this actually, so you guys can take a screenshot of this, or I will screenshot this for you and drop it in the chart. But I just realized, Castle, when you said that, is that we wouldn't technically be taking this trade because we're only tracking 2 to 6. So this price action we can participate in, but this price action down all the way from this entry we would have not participated in, which is the part that I keep forgetting as I'm building the context for the trades that we are going to track. I keep forgetting that we're not trading Asia. Here, I'll drop this entire thing here just for you guys to have in your arsenal. Okay, so let me back this up. Let me see. I'll delete this. We can keep that on. This deviation still applies. I'll delete this SBS. In hindsight, this stop loss would be here. Trailing stop would be there. Okay, so let's just back it up to 2 a.m. and see what we see so far. So from 2 a.m. it would still kind of be this. It would still be the same narrative. It would 100% still be the same narrative. So this is the deviation coming out of Asia. We have accumulation and redistribution possibly happening here. We're about to flip Q2. So what I would want to see here is a new manipulation occur in Q2 or Q3. Since we're still playing off of this Asia range Q3. So this would have to be a new SBS, right? So we close above this one here. So 1, 2, 3. We'd have to come back to sweep 2 in order for us to have a new entry going into London for the next 4-hour candle expansion. So let's see. 1, 2, 3, and then 4, 5, anywhere in this range. All right. And it doesn't happen. It just goes straight up. Okay, great. All right, so now that this has played out, I think it goes higher than this. Okay, yeah. So it goes all the way to 4.5. So no new London trade for us to take here, unfortunately. Let me track this. This is another missed trade, so this would be on January 6th. I'm just trying to track how many trades we're missing by only referring to Q3 manipulations. So this would be the first trade that we missed was not Q3. And this one is that it's not the 4-hour candles that we're trading. So not 2 a.m. to 2 p.m. Okay. Yeah. Usually when there's an expansion from 1:30 into 3 o'clock, London will chop for the rest of the range. So we shall see how this goes. That was really nice though. I'll keep this deviation on. So let's see if we get a new CSD here, or if we get a new accumulation at 4.5. Wow, just keeps riding up. So 3 to 4:30. All right, we're already in Q4, so it looks like we're approaching our next 4-hour candle now. So we would want to see a CSD occur like within this macro, hopefully. And it doesn't. Okay, so we've manipulated lower. We have a new bullish CSD actually, which I would pull here. So you guys can see what that looks like. Pop it onto the 1 minute. So it was this to this is what I was, the high that made this low. So it's gonna, so this is at 4.5, right? We have a new accumulation. We manipulate lower and distribute higher. So it looks like it's gonna keep going. Of this bigger Q4 manipulation that happened during AM session, we're above 1.5 now. So we can see, we'll see if a new accumulation manipulation higher occurs here. Doesn't look like it's reversing at this point. We don't have a new Q3 to refer to. We're still working within, where we've already exhausted this one. We're still working within Q4 from the AM session prior. So accumulation happening where at after 1.5 was achieved. So we closed above it, retapped it here, and now we're accumulating. Okay, no CSD bearish. Okay, there we go. Finally got a CSD bearish here. So this would be the zone. Another Q2 manipulation, which is common for New York. This would be the zone here. This would be the deviation. Now it looks like it's gonna close back higher here, which is honestly what I would want to see for us to continue higher. So once it closes this high right there, then we have a new CSD bullish, which is happening right after we tag 1.5. What have we mentioned about 1 to 1.5 before? That is a deviation that's going to be missed, or sorry, that's going to be tagged and then cause the reversal if we're trading counter trend. So yes, for us to be able to catch this ride higher for the day, I would want to see the CSD bullish. And there we get it. So hold on, I want to see something here. I want to just consider this for, so we're not trading this Q2 because it's originating in Q2. This ends up being counter trend. Let me change this to be counter trend, right? So the reason we're not trading this again is because we're in Q2, so there's no risk of us trying to take this trade. Then Q3, and I'm talking about if we're trading this live, Q3 prints, and when you see this type of price action where like you have a big body candle and then we are unable to close below that big body candle after it's printed, this is when we can anticipate that a new order block is going to be formed, which is what I touched on earlier, right? So let's say that this is the zone. Mean threshold is where I would want to see price be held up. So on the lower time frame, you can see the order block within the order block. It's holding price up here right at mean threshold. So that was a concept that I touched on earlier here as well. Again, irrelevant to the actual model that we're trading here, but just, you know, so you can understand how I'm reading price. All right. So now here we have Q2 manipulation, which has now been invalidated. We now have Q3 AM session manipulation. All right, we have new deviations that we can use. All right, so now we're waiting for SBS to form, or for us to be able to use OTE. Okay. 1, 2, 3, 4, 5 is what I'm thinking. And if this is OTE here, now the reason I'm assuming this is 3 is because we have a swing high that formed finally. It could close above it still. It could continue higher for that 3 to go higher. And it does. Okay, I have another swing high. 3. And we gotta get another one. OTE is now all the way up here. So these are all our only possible entries now. We wouldn't enter at 50%. It has to be within the zone as well. And it keeps going. So now we've exhausted our 6 to 10 a.m. candle without an entry. So now we're moving into, or we're not quite there yet. We're still at 11. Sorry, now we're in our 10 a.m. to 2 p.m. candle is what I meant. 3. That would still be 2. This is the pullback. So high, low. If you want to see what I'm talking about, this would be the first pullback here after we get the closure above. So close here, 1, 2, which is technically be this low, 2, and then 2, this is the low until 3 fully forms, if it ever fully forms. Okay. Hopefully we get that displacement down, back into the range now. Now, if this is a Q4 manipulation, once we get this close here, we want to see where it falls within OTE. Oops, wrong one. Okay, so see, this is the alignment. 4 deviations is bringing us right into the OTE range, which is what we want to see for retracements. I've touched on this on Twitter before, as well as here. There's basically 2 ways that price action moves. In my opinion, it's going to be either consolidation, where we have market maker buy models and sell models, right? So this is essentially consolidation because we're all trading within one range. Or it's going to move within a fashion of OTE, where we're just trading higher and higher. And what ends up happening in either case is we have a range, premium to discount, right? And then we have OTE, or sorry, standard deviations back to the opposite side of that range to either take the low if we're consolidating, or to return to fair value if we are I guess this is a huge manipulation, so it would be back into OTE of this range. So it just all depends on how we're actually moving. So if we anticipate that there's going to be more expansion, then we're looking to take this change in state delivery counter trend back into 2 to 2.5, which is usually around OTE, or we're going to take it down to 4, which would take the opposite end of the range if we think we're consolidating. Alright, so this is what I'm hoping to get from here, is we'll get into either 2 to 2.5, which is at 2 or around 2, 4 if we can reach into the zone. So Q3, Q4, yeah, we're not going to take this. This is currently our Q4 zone though. Let's see, okay, so 2 is swept. Darn, did I miss our entry? I didn't, because OTE is still missed. So, oops, hold on. Let me make sure that I have OTE on the right range. Yeah, so OTE is here. It just misses OTE. Just by the skin of our teeth, it misses it, right? But we can't take that entry again for Adrian when he's trading this. All he wants is a top of the zone. I've had to make this a little bit more mechanical. We're just demanding, does that breaker zone have bearish SMT? This right here, I have no idea. We're not using SMT in the model, but we can double check. I'm afraid to click out. Let's see. Let's go to January 6th and see if it shows us. Yeah, there's no SMT in the model. But we'll look to see if we can find it. Okay. Hold on. What time? This is at 11:10. So yes, SMT. So this is the high here that we were able to make the deviation. The next high, ES makes a higher high. NQ makes a lower high. He does say that you know, it can add confluence, of course, but it's not a requirement per se for the model. It also does help him decide what swing he wants to put the deviations on. So for example, because ES made the higher high here and NQ made the lower high, he can use this as his deviation as a result. He can use this candle, the failure swing, instead. Okay, back into the zone. Boom. Now we've got our 4. Beautiful. Okay, so here is where 2 is swept. Oh, okay, so that is a 4. 2 is swept there. So this technically can be our 5 unless we have another swing form. We just missed OTE on that one, unfortunate for us. But this can definitely be 4 because it swept 2. So 1, 2, 3, 4. We now have an entry at OTE and 0.705. Stop loss is going to be the low. And we are aiming for at least 1.5, which is above 3, so it's perfect because that would be 6. Basically, so almost a 2R trade, 1.6. Again, as long as that's 1R, it's good in Adrian's book. That is a gigantic stop, we'll say. It's not, even for me, it's a gigantic stop. I'm usually okay with a 50-point stop in general, but it is. Yeah, no, I like it. Honestly, I aim for at least 2R. Really, really. I can say that because in this case we're trading way above previous day high already. I don't like this. I would be out. I would be completely out of the market by now. But you know, if I'm insisting, and again, you know, like I don't trade PM session, I'm not trading a previous day high, so there's a lot of rules here for me that would say like don't trade this. But just because, you know, for the model itself, this is still tradable for sure, being that, you know, we're all, a lot of people in Kingline are trading the PM session. Yeah, I only trade 3 a.m. to 11 a.m. I'll push it to 11:30 if it's continuing to expand, but at 11:30 it's a hard cut. I'm cutting that trade no matter what. Okay, so we're in both trades at this moment. I'll place one at 0.79 in case it decides to come down, but you know, it hasn't yet. Okay, and as soon as I say that, okay, this looks like it might get stopped out. We'll see. So we're in all three. Oops. Wrong box. We're at 4 to 4.5. We want to see a turnaround here. Kind of lethargic. Here we are at 2. Ooh. We're at 2 here. So we've opened, we've made this low. We want to see a bullish change in state delivery here, or else we're screwed. There we go. So now this is actually a new PM session Q3 happening with an AM session Q3. Isn't that interesting? So this CSD here confirmed during Q3 and should bring us home, thankfully. Yeah, hold on, let's check if there's SMT here at 3 p.m. There is SMT here. Well, no, next to the next swing low technically. Oh no, there's SMT here actually with the Q3s. So this is previous day Q3. Or AM session Q3. AM session Q3. PM session Q3, PM session Q3. Cryptic. 11:30 is my hard cut, yes, because of London closing. So PM session is the only session throughout the day where there's only one market open, and that is New York. So in Asia, you have both Sydney, so Australia markets, and Tokyo markets open. So I think, like, depending on when daylight savings time is, Sydney opens at 7:30, Asia opens at 8:30, something like that, or vice versa. Could be getting it wrong, right? But Sydney and Tokyo both open during Asia. Then when London opens, you have Sydney, Tokyo, and London open. Then when New York opens, you have London and New York open. When PM session opens, only New York is open. So to me, it has the least volatility. Plus, you know, like, it's lunch, I'm gonna leave the house. Once I leave the house, I don't want to come back to the house. So, like, there's a lot of other, you know, personal reasons I don't want to come back to the market, but logistically for the market itself, I'm not looking to trade the session with the least volatility due to only one market being open. All right, now let's see if we should ride off into the sunset with profitability. Oh no. Oh, great. That was fast. Hold on. This is going to be a pain. 0.79 is tapped here. Let me move this back. How many longs do I have? Yes, I have all 3. Okay. Okay, and this one. Alright, I think we're good to go. I'll move this one to the next candle. It is on the next candle. So I'll move this to the first candle. Wrong one. This one. That is on the first candle too. This is on the next one, and that's on the proper one. Okay, they're all in the right place. OT, do you ever drop down to the 1 minute to check PA? I don't personally. But you know, like, for the only situation is like when I showed you here, which I did earlier, is if I want to verify that the manipulation is in the right place. So I can look at this from the 5 minute and I can tell that I want to put my standard deviation on this one candle only, right? Let me just replay this back to here so I can show you. So in this point in price action, I can look at this from the 5 minute and I know this is where my manipulation is. To double check that my logic is correct, I'll jump into the 1 minute to make sure that this is the high that created the low. So just for structure's sake, yes, I'll jump down. But to see how order flow is printing, no, absolutely not. Because there's just too much noise, I find, for my personal style of trading. That's not to say that I'm right or I'm wrong or you're right or you're wrong. This is just what I find suits me for how long I want to hold the trade and how I want to view price action. It's subjective 100% to me. So I would recommend it. You know, if you like to look at the 1 minute, then, you know, by all means, make that money. Don't let it make you. So we have a new manipulation here. Yeah, well, okay. I've explained this story before. So side note really quick tangent. What happened is I backtested the 9:30 to 10:10 window because ICT has this clip, which is kind of how I became, you know, quote unquote famous on Twitter. ICT dropped this, he did a shotgun Saturday. I was listening to him and he said, you know, if you just wait until the market opens and you wait until liquidity gets ran and then you enter on any fair value gap after that, any freaking fair value gap, he says, and you take this fair value gap to the opposite liquidity, you will be able to quit your job in 90 days. This is the quote, right? I clipped this, I dropped it on Twitter. This tweet ended up getting like 1,000 retweets. I focused on backtesting this. I backtested this for 250 reps. And that window of time ended up being from 9:30 to 10:10, in which all the entries, or majority of the entries formed, were from 9:30 to 10:10. So I was not specifically looking at a model. I was just focusing on any fair value gap, any liquidity, and what specific time I need to enter this trade for the highest probability. So I dropped these results. I end up calling this the opening Judas backtest. This is how I became Backtest Jess. This is the backtest that like everyone was like, oh, you should call yourself Backtest Jess. So whatever, I dropped the results for this backtest. And what I found in this backtest was that on a 1 minute entry, the most entries occurred. And I mean, when I say the most, I mean like 60 of those 250 entries, maybe even more. 60 of those 250 entries occurred at 9:42 to 9:43. Yeah, I think he backtested it with just the inversion rather than a regular fair value gap. But yeah, so once 9:42 to 9:43 is when that 1 minute entry will more than likely occur. I also found that if you entered at 9:42 to 9:43, 70% of those entries that occurred in this window were always with a fair value gap. They always have some sort of imbalance paired with them, so it's never like an order block, it's never a breaker, it's always specifically some type of imbalance. So a fair value gap, an inverse fair value gap, a BPR, a volume imbalance, just a straight up liquidity void, right? What is this? Is this from Ryan? Or is that from you? So, oh, I see. Okay, yeah. Nice. So, uh, once I went through this back test and I said, okay, I have all this data now. There's a 91% chance, or I think it's even higher. I think 96% chance. There's a 96% probability of a fair value gap forming in this opening window, which is, you know, the first 30 minutes basically. And when you take that first fair value gap, you can yield at least 5 points. That's the probability behind that first fair value gap that forms, or that's the probability of that fair value gap forming. So once I had all this data, I went to go demo trade it. In demo trading it, I realized that I don't like trading this fucking model. Like, great, the data shows that it works. Great, the data shows that it's profitable, but I don't fucking like trading it. I don't like it. I have to get in quickly. I have to get out quickly. It's fucking annoying. So that is when I realized I am not a scalper. So I backtested 250 reps only to discover I do not like scalping. So then I had to go back to the drawing board and find a model that works for me. Now, because I had 250 reps of this model forming this specific way, I simply upped it to the 5-minute chart, and that became my model. And ICT ends up later dropping the one setup for life video, which session liquidity is something that he's always taught anyway. This is not a new concept after one setup for life. This is one setup for life. He's just reiterating what he's taught in older videos. But session liquidity, midnight, previous day high, previous day low, these were all taught in the 2016 to 2017 series. So, mastering high probability scalping, scout sniper series, precision trading concepts, and market maker primer, I think is the one I'm missing. So all of those series, it touches literally on the same exact concepts. And so what I noticed is that, you know, a high probability 5-minute 2022 model is going to be, the foundation of that is going to be when it sweeps session liquidity. So then he drops one setup for life, confirming this model that I've always known was there. And I decided to just stick with that. And that's when I found that, you know, a 5-minute is very much more suitable for how long I want to hold the trade. The satisfaction I feel with the trade as well, because although I can make like 110, 20, 30 points in a 5 to 7 minute time frame if I'm trading the 1 minute, I still want to trade more after that. I still have the sensation of like, I want to click again. But if I were to yield, I don't know, the same amount of points over the time frame of at least 30 minutes, I found that I was satiated. I didn't want to click anymore. I was satisfied with the trade that I took. I was happy that I held it, and I'm ready to leave after that point. Right? So these are the things where like you have to journal this for yourself, which is why I'm always telling you guys need to journal, because you can't figure these things out until you experience it. And then you'll start to see how much you're journaling. Oh, I should have held. Oh, I should have closed. And one of these two concepts is going to tell you the exact type of trader you are. Are you a scalper, or do you want to hold this? So long story short, I just had to fail on the 1 minute enough, or discover that I don't like trading that enough. Then I moved up to the 5-minute. The 5-minute suited me well. I actually nowadays, like, honestly, I can trade a 1 hour chart. Like, that's how comfortable I am holding. My trades over 4 hours are basically, I mean, they're practically 100% win rate, but I know that I lose some of those trades, like, over the scale of all of my prop firm accounts. So I would say any trade that I'm holding for over 4 hours that has a high 90% win rate. So, you know, as long as I'm trading the higher time frame, I'm really comfortable on the 15, 30 and 1 hour. But sometimes I can overhold those trades because I see a much bigger idea, and an effort to not hold through all that drawdown, the 5-minute is perfect for me. So like getting in and getting out, that's my 5-minute chart technically. The 1 minute I hate to death. And I think that's where streaming on a daily basis for the server was actually very much against my instincts, because I'm simply trying to trade the 1 minute just to take a trade for you guys. It's not how I actually trade. So I'm like, I'm much happier as a trader that I don't have to trade. I don't have to stream live, and I don't have to stream the 1 minute live, because it's terrible. Yeah, exactly. Honestly, the M1 is just like, it can make you think that you need to get out of the trade way sooner than you have to. Especially because you're referring to like 5 and 15-minute ranges, right? So I just don't want to click in and out a million times. Like, I don't want my journal to say that I took 9 trades. I don't want my TradeZilla or my trading dashboards like seeing any 2-digit trade numbers. That annoys the hell out of me. I love seeing the days that I took 1 to 3 trades. And that makes me happy. That feels to me that I am a successful trader when I can make, 3 figures, 4 figures, and do that within 1 to 3 trades. So that's, again, this is just how I feel, what I define as success for myself as a trader. It doesn't mean that I'm right and you're wrong, or you're wrong and I'm right. It's just all based on how you view your own development and success. Okay, so it's 4:30 now, so we're already out of this trade anyway. Let's break this back to 4. I think we all agreed that we wouldn't trade past 4. Okay, so at this point it didn't reach target. Okay, so we didn't get the full 1R, unfortunately. Obviously, I'll play it past that just for you guys. So, okay, no, so it never does hit PM session high. I'll play it till the actual end of the trading day. It looks like it doesn't hit it until 1800. Okay, yeah, so the next one's going to be 1800, so I'll just leave it there. We more than likely closed at 4. Or per the model, we more than likely closed at 4. So I'm going to track this just like this. This is a bit of a late entry, but it is an entry nonetheless. And it did happen during the 150 to 210 macro. Just about. Alright, hold on. Let me get the whole picture first. Another thing, Cryptic, I don't know if this has stuck since we discussed it, but if you're entering on a 5-minute chart, and this goes for everyone obviously, but if you're entering on a 5-minute chart, there is absolutely no fucking reason to look at what's happening on a 1 minute. Like, what the hell are you looking at the 1 minute chart for if you entered on the 5 minute? What do you mean? Yeah, like, I don't know. If my whole idea is structured on a 5 minute, what the hell am I looking at the 1 minute for? What do you mean, Cryptic? Like, you enter on the 1 and look at the 5? I mean, that's a good idea. Yeah, exactly. That's what you should be doing. You should be entering on your lowest time frame, and you should be confirming whether the idea is going to develop on your 5, 15, and 1 hour. So when that 5-minute candle is closing, did that 5-minute close above the previous 5-minute? When your 15-minute candle is closing, did it close above the previous 15-minute? When your 1 hour is closing, did it close above the previous 1 hour? If it didn't, then you know to expect a retracement and to prepare mentally for that, or to just close the trade. Yeah, exactly. Like, never do that. Please, God, never do that. Because that is a recipe for disaster. 100%. So this is Monday. We were long. Yes, we were. And this entry was at... So both of these were at 1345. And this one was at 2. Oh, I guess I have to do 145. Yeah, exactly. Because of what though? Because you're watching the 1 minute for the entry? I don't know if you guys have ever studied swing lows, but look at this swing low, right? There's just this very obvious swing low that's in front of our face. 1 point of the swing low forms at 2. It gets taken out at 3. The next swing that takes out the original swing and then trades higher is happening basically at 4, but at 350. And if you just wait for, then this happens almost all the time, that there's a major swing low, right? It forms exactly like this. So if you just wait until that swing low fully forms, which is generally what's happening at the open, right? If you wait until it fully forms, you will hold on and make so much more money instead of just trying to click as soon as the market opens. Same thing goes for Asia, right? As soon as 1800 comes around, people are like, oh, who's long right now? Who's short? Who's long? Who's short? I'm like, dude, ain't no way. Wyckoff model 2. Oh, interesting. I got rid of one. Asia is that session for me, so I stopped trading that session. Next one is London. Oh, really? You want to get rid of London? That's hilarious. So Asia, I do think more people tend to lose during that session than they win. There's obviously a few exceptions within the group, but I think that hold on, 245, 345, 120 plus 15 minutes, 155. But I think London is probably more people's speed than they realize. Unless they're super antsy and they don't, they can't hold a trade for more than 90 minutes, then I actually think it benefits more people than not. Wait, this doesn't make sense. I did that math wrong. 120 is 2 hours plus 15, so 135. Yeah, I love London. I can trade London and pre-market for the rest of my life and never trade New York. I'd be completely satisfied. I get plenty from London and pre-market that I never have to trade New York if I don't want to. There are days, obviously, where you can kind of see the daily profile forming, and you can match it up with news, and you can see the weekly profile forming. That it's like, okay, I need to wait for New York to get the most juice out of this lemon. So this is 2 to, no, not 2 to 6. This is 10 to 2. Wait, no, it's not. It's not 10 to 2 neither. 2 to 6, 6 to 10, 10 to 2. Are we not trading PM session? Because this entry happens. This is technically 2 to 6. Alright, we're gonna have to add another one here. Yeah, we're gonna add another one. It's gonna be 1400 to 1800, technically. Assuming we're trading after 2 p.m. We did enter right at 2 p.m. but I think 2 p.m. is when the PM session actually starts, so I'll go with it. Like when the streamer actually hops on for the stream. Alright, so this entry, all of them were during Q2. Yeah, that's a good point. And again, like, I also think people, yeah, like the speed of New York, for example, can, like, of course you can make a lot of profit quickly, but you can get stopped out really fucking quick, and you can get stopped out really bad really quick. So I think for most people, like, they like the speed in their, you know, to their benefit, but they don't realize how much it's wrecking them, you know. So if they could just slow down in that aspect, or what I did when I was learning how to trade, not on purpose, it just kind of happened this way, is I actually studied Asia first, which of course is the slowest session, consolidation, and then I studied London. So I got familiar with consolidation, then manipulation. London's a little bit faster, and then I started trading New York. So I just happened, you know, to do it the right way. What I think in hindsight is I studied each session by speed, right? And I was able to stomach New York a lot better because I had studied the 2 sessions prior. And with that, I could fully understand when the accumulation and the manipulation were done forming in order to catch the distribution that's occurring during New York. But I think too many people just hop straight into New York and they're like, oh, Asia and London are too slow. But all it really is just, it gives them the time to be indecisive, I think, for most people. And they just like to click and click and click in New York until their accounts are blown. Alright, so ooh, this is interesting because I actually told Adrian when I was forming the sheet that we're probably never going to enter on the rejection block. Okay, we technically didn't enter on the rejection block there. It's still within the OB, but this is all the inversion. This here would be the rejection block entry. Right there. So both of these entries, so this is an OB, this is an inverse, and this I would also consider the OB entry. Okay. Wait. Or is it? Yeah, it's OB entry. So OB, inverse, OB. This is 618779, and this entry was 5. And in all of these cases, 5 swept 4. Yes. And this occurred in the 150 to 210 macro. I think I'm gonna have to change these times to be consistent with this. Just do all military. Alright, and we didn't achieve any of these deviations, unfortunately, just because the time ran out. And it ended up being for this first one. Hold on, did I copy the chart? I sure didn't. Let me copy the chart really quick. Hold on, Cryptic. I see your message. Let me just copy all of this really quick before I reply to you. I'm not ignoring you or anything. Alright, here we go. Okay. So this one, Jesus, that's terrible. 0.18R. Wait, no, that's not right. 4. Oh yeah, that's right. Okay. 0.18R. That's horrible. I mean, it's still profit. Profit is profit. .18. Now OTE to standard deviation. Oh, none were met, so nothing to put there neither. And then the chart. Second one. 0.70, 0.52R. And the third. For yes. This is, oh, this is good. 1.14R. That's actually good. Did I bring it to here on the last candles? Well, it's here because we closed there. Alright, so 0.14R. Or sorry, 1.14R. Alright, and then for the note here, I'm just gonna put that we closed end of day, 4 p.m. Alright, I think we're good to go there. Alright, so Cryptic says, yes, because London messes up with my sleep, and also most of my recent bowling counts are from London. So it's like I'm losing the right way during London, and since I'm actually sleepy and not going to bed after accepting the loss, kept on trying to get the loss back while in a bad state of mind physically and mentally, causes huge losses. Yeah, I see what you're saying. So if you're losing during London, then you go into New York trying to stay up for New York and continue to lose. Yeah, that's, so sleep is my #1 rule. 100%, it's always been my #1 rule. So in my trading plan here, or I guess it's not technically in the thing, but before I can trade at all, I have to work out, hydrate, meditate, write my values, be grateful, and then read this trading plan, right? It used to be write it out. In order for me to work out, I have to had slept anyway. Like, I'm not gonna work out if I didn't sleep. I'm gonna say I'm tired, right? So sleep is 100% like the #1 rule. If you stayed up for London, that's actually what my problem was when I used to trade Asia, is that I would stay up for Asia, lose during Asia, try to get it back during London, and then I'm taxed by the time New York comes around. And this is actually not that long ago. This is like maybe a year to a year and a half ago that I was doing that type of stuff. But 100%, if you're not getting any sleep, you should not be anywhere near the charts. All right, I'm gonna lock this here. We finished up Monday. We need to go into Tuesday next. We're actually not, this is actually not that bad, I think. We don't technically have a win and loss rate here, so I need to add that in some form or fashion. Yeah. Oh, this, I guess, technically. Yeah, I need to add a win-loss rate for just a specific, for a direct win-loss rate. But no, this is actually good. We're getting, because we're tracking all of the entries, we're getting a lot of data super quick, in my opinion. And it's also allowing everyone to see the context behind every single trade and how we're able to come to the conclusion that we should be taking the trade. So I think overall the backtest is going really, really good. Any questions from you guys? Sleep is the reason I fell off the cliff, blew my cash cows within 2 days. Yeah, the only thing you can really do for yourself is keep your word for yourself, in my opinion. Like, if you decide you're not going to take bad trades, you're not going to implement bad habits, all you can really do is keep your word to yourself. If you're unable to do that, you have not proven to yourself that you deserve to trade. And I don't know, like, most of us, I think, or, you know, most of you guys, I haven't worked in a long time, but hold on a second there. We'll be there by 4 with my truck and tools. Okay, so if you, most of you guys, I've been unemployed for a really, really long time. I was unemployed before I was a profitable trader, so I kind of had no choice but to make this work. And I don't say that in a way that is encouraging. It was really hard the way I did it. I did it the very, very wrong way. I would not recommend anyone ever do it that way. But most of you have jobs that you're also working and trying to become a successful trader. And so if you think about it like this, you're wasting your time, quote unquote, your time making your money at work. You're spending that money to buy an eval, and then you're blowing it instantly, or whatever. You pass it, and then you get to fund it, and then you blow that instantly. So you've not only wasted the time that you traded, you've not only wasted the time that you stayed up to watch price action play out so you can take this trade that didn't work, you're also wasting the original time that you spent to make that money. So you're wasting like 3 times the amount of time by making stupid decisions. I've always preached as well that the only thing to start maximizing your wins and eliminating losses is to stop doing dumb shit between your winning trades, right? So like, you win a trade, you should probably like take a step back, breathe for a second, acknowledge that you took this good trade, journal that you took this good trade. I don't know, reiterate to yourself all the things you did correctly to take this winning trade. And then, you know, wait until the most opportune time, until it's really freaking obvious for you to take your next winning trade, right? But if you're just saying, okay, I won, I want to hop right back in, and there's no method or mode of logic to do that, then you're asking yourself to like give back your profits and to lose that. So, you know, of all the currencies we have, time is just one of those things that, you know, I don't think we ever learn really that we never get it back. So, you know, just spend your time making better decisions, and you're really never going to trust yourself until you can actually keep your word to yourself. So it's just, you know, you gotta journal these things, because it's never gonna get through our thick heads until you really have had to sit down with yourself over and over and over again. My pleasure, my pleasure. All right, guys, I think today was a great session overall. There are still some outstanding questions that I have for the model. I think maybe I'm probably overthinking it while I'm in the backtest session. It's probably going to be really obvious to me after the fact, but I'm going to discuss this with Adrian to make sure that I'm approaching this correctly. Neither here nor there. And then, nonetheless. And then, the next session will be Tuesday. If I get answers from Adrian by then, we can resume the same way. There are 4 trades here. These trades right here, that are possibly break even and not losses. But yeah, other than that, you know, actually I definitely need to add a win-loss column. But other than that, the trading is going very well. And Thursday, we can more than likely review these trades with Adrian, maybe. Or you know, we can have another Q&A with the model just to make sure that we're all approaching this correctly. Thanks. thanks. Anytime, my pleasure. All right, guys, enjoy your Saturdays. Go touch grass. Go work out if you haven't worked out. Take a shower. Do your laundry. Do things other than trading. I'm always here for you guys if you guys ever need to bend an ear. Great. All right, guys. Have a good one. Bye.